Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Saturday, May the 1st, 2010. Folks, let's start off with Goldman Sachs this week. It had an absolutely horrible week. The Justice Department, led by the communist-in-chief, socialist-in-chief, or whatever you want to call him, Eric Holder, has filed an investigation into Goldman Sachs's practices not having to do with what they were brought before the Senate for. So this just tells me that what they're trying to do is they're trying to decapitate Goldman Sachs. Now, by no means am I a defender of Goldman Sachs. I think they're scum, as I believe most Wall Street houses are. But that being said, I think the thugs in Washington are even bigger scum, and I really question their motivations here. But let's get to the technical analysis of on Goldman Sachs. You have a breakdown below the ever critical 147 level, which was resistance back in January, or February, I should say. That was broken. If you don't see on Monday morning a pop higher above this support line, which it could very well do, don't be surprised if it does, you're going to see this stock just drop right down to 130, which was the previous support level. I'm concerned. I'm very concerned here because the financials as a whole, remember, Goldman Sachs is best of breed. The XLF, let's get to the XLF, has yet to really break down. Although ever so extended, it has yet to break down. And this is a weekly chart. You could see how it broke down not broke down, closed on higher volume last week, rising down volume, which is a concern. Now, we didn't break below previous support. As a matter of fact, we have a little bit of a bottoming tail. I wouldn't be a bit surprised to see an attempted rally early next week in the financials. So be warned. If you're not sure yet, folks, you need to wait for a counter-trend rally. That's what I tell my subscribers. Wait for a counter-trend rally, then get short. Right now, it's too late. You should have been short already. We're already short the financials. We've been short for a little while now, and you should have been short already. The cream is pretty much taken off of the cake, as they say. Let's look at the SMH. This is the other sector I really watch to look for a breakdown. You saw a breakdown on the SMH. This is a daily chart below these bottoming tails here. That's a major concern. Up until Friday, the SMH looked fairly bullish, with the exception of this doji formation up here. But I wouldn't been a bit surprised to see it rally higher. No, it didn't. It broke down. So I wouldn't be a bit surprised to see a breakdown in the SMH. If the SMH, or the semiconductor holders, or the semiconductor sector, and the financials cannot rally, the rest of the market is going to follow. I repeat, the rest of the market is going to follow. So please, use caution. The retailers, I've been mentioning for a few weeks now, get short of these retailers. We've been short of, we closed out a half of the position last week on Friday. We're still short this position, so I'm not going to be embarrassed to mention it to you, because if you haven't shorted it yet, it's too late. Joseph A. Bank. We were shorting Joseph A. Bank when everybody else was saying buy, buy, buy. We were saying short, 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 because it was just at extreme overbought levels. The risk to reward was on our side. So that's when we said, let's get short. We shorted back here. We got this correction here. Shorted more, coming up into this new high at 65.59. Bam, we took a little bit of half profits off the table on Friday. It continued lower. I expect to see continued weakness on Joseph A. Banks. But if you decided you want to jump in on Monday morning to get short of Joseph A. Banks, you're crazy. It's too late. You need to see a counter-trend rally and then a failure, like you had on Thursday. You had a counter-trend rally. Friday was a failure. You should have been short as we broke below the Thursday's low. It's too late now. Unless you're very good at keeping tight stop losses, wait for a better entry point. But getting back to the RTH, it looks like it's going to correct, finally going to correct. This sector has just been absolutely out of control. People are broke. They finally start making a few extra bucks, rather than pay down their credit cards, which have been, their credit limits have been sliced in half. They're going out and they're spending more. And this is government enticement. But those enticements have ended. The housing tax credit, that's expired. That's done. The Federal Reserve is no longer buying up these MBOs, these mortgage-backed securities. So you're seeing currently a weakness in the VIX 10-year bond, a weakness in yield. This is a yield chart on the 10-year bond. Usually, the yield trades with stocks, and as you can see, topped out here, pulled back. So there was a bit of a divergence. Now the 10-year yield is correcting with the market. The only time you usually see the opposite is when one gets out of control. If rates go up too fast, you see the market correct solidly. If you see rates decline fast, you might see a correction in the yield, and the market takes off. So the VIX, do I expect to see a continuation on Monday or early next week? Yeah, I do. A break above the 2320 level on the VIX is significant. Then you're going to have the next stop at 2801. So I encourage you strongly. It's at times like these where you really need mentoring. The trend is beginning to change. So I would strongly suggest, if you're not a current subscriber, if you're new to the market, don't listen to these thugs on Wall Street. Finally, on Friday, you heard on CNBC, these people they were interviewing on the floor finally say, I'm pressing the sell button. I'm pressing the sell button. We were saying sell. Back here, skim off profits. We knew this. Go back to my previous tapes, or my previous recordings on YouTube. We were saying sell, take profits. This is the time to get out. Now, they were selling as the market began to decline. And we were short. They're not short. We were short. So we profited on the way up, and then we were positioned on the way down. If you don't know how to trade this way, please take advantage of the 14-day free trial offer. Sign up to the club. If you don't like it, cancel it out. 14-day free trial offer. It's make an investment in yourself. This is a business. This is not a game. This is not a game. And there's going to be great buys coming soon. If you expect to see a continuation of this correction, as I do, you're going to want to see your shorts expand in value, appreciate in value, and then you want to look for opportunities. And that's what we're going to begin to be doing soon, is looking for opportunities to get long. I mentioned our last week, our inflation hedge. I don't want to upset my subscribers by saying which hedge it is. We don't have a big enough gain in it yet, but we have a nice gain in this position where we're doing well. We already went long in certain positions, but you have to do it at the proper time. So please sign up for the 14-day free trial offer, subscribe to my YouTube video, and have a great trading week. If you have any questions, please shoot me an email, Robert at the Contrarian Trader. Best of luck and have a great weekend. It's a beautiful day out today. Bye-bye, folks.